course, is January 19th, 2017, our regularly scheduled webinar. Today's presentation is going to be really fairly short. I mean, the markets have been, there's not a lot going on, by the way, right now. I mean, we'll look at the S&P live after I get through the presentation here. But as you can see, we've had a series of narrow range days. Market's been really quiet. You know, I think what the market's doing is it's tempting people to try to get short, which quite frankly to me would be a mistake at this point. But nonetheless, between the fact that there's some really quiet market action and earnings are really just starting to kick off, there's not a lot going on. So I mean, what I want to do this week is start with the monthly charts, and I'm probably going to continue showing the monthly charts of all the major indexes as we progress forward. And you know, one of the reasons, of course, is, you know, we are butting up against the upper extreme band. So it does make me very concerned. As you know, I fully respect these bands, and as we know, you know, over and over again, they tend to repel prices. So, you know, we're here again. I mean, we're sitting literally against the upper band. For the S&P 500, that level is 2288. All right, and you can see as of yesterday, we closed at 2272 roughly. So we're within 16 points of that upper band. The question is, do we get through it, or is the market repelled? For the Dow, the upper band is 19,846, all right? And as of yesterday, the market was closed at 19,805. So again, it's within 40 points of that upper band level. Now, the composite, the upper band is 5546.76. You can see yesterday we actually closed above it, all right? So this is the only market at this point that is actually above the upper level. Now here's crude oil, all right? This is the actually the spot price, the WTIC. The XLE doesn't plot with the extreme band, so I wanted to actually look at the raw material price. And again, this is kind of a key level because, you know, it busted through the lower band. Okay, and right now it's testing that mid-band. So the million-dollar question here is, you know, does crude get through that, or is it repelled? I couldn't plot again the TLT on a monthly chart with the extreme band setting, so I'm showing the actual 10-year rate. This is the 10-year Treasury note rate. All right, which does plot, by the way. So again, what's kind of interesting about this is the fact you can see that the rates have gone up and spiked up. Market fail here. Chart. Now, Apple again is very interesting because again, it's approaching the upper band. Upper band is 126.63. Virtually closed at 120 yesterday. Okay, so we're within $7 that upper band. Now we look at the short-term levels. Okay, here's the S&P 500 60-minute chart. The main resistance lines are the 2281 and 2250. Okay, and what's been kind of interesting is the market's kind of flatlined here between 22.5 and 22.81. After we hit it, we hit the objective back in the early part of the year here, okay? So, I mean, it's kind of interesting. We were looking for 22.81 to be the objective and hit it. Now the market's been just essentially trading between, the two confirming lines, all right? The 22.57 is the upside. The 22.73 is the downside level. And yesterday we closed under it. We've actually had a few closes under 22.73. So at this point, to retest 22.50 would not be unusual. And then here's the VIX. All right, the VIX, we're virtually sitting on the 1250 line, okay? In fact, you can see from this chart that yesterday it closed at 1248, so it closed within 2 cents of the 1250 line. And it's been kind of interesting. It bounced off it back here on the 12th, came right down to the downside line, which was 1094, reversed and headed up. Okay, so again, for this market to continue up, we would want to see the VIX collapse. And we'll look at the VIX live after the PowerPoint's done. But now here's the TLT on the 60-minute chart. All right, 121.88 is the major level it's struggling to hold here at this point. The downside line is 121.09. Now it's interesting because yesterday it closed at 121.01. So it had its first close on the 121.09. It closed under that today, and I believe the TLT drops to 118. And I think the TLT is under that today. And here's the Qs. The Qs have confirmed the move up to 125. So, we're kind of getting this divergence here again. I mean, the Qs and the NASDAQ market are showing the most strength, okay? And the Qs have confirmed the move up, whereas the S&P now has really confirmed the move down. So, we're kind of in no man's land right now with the markets. And then here's the diamonds, okay? As you know, the Dow has struggled to get through 20,000. And again, I think that's a tremendous psychological level for most market participants. As evidenced here by the diamonds, you see it got within $20 of it, got within $40 of it, then got within $70 of it just the other day, and it's moved down. And right now, the diamonds are struggling to hold the 197.66 level. And quite frankly, if it breaks through that, I expect it to go to that 196.88 level, which is the next support level to the downside. And and by the way, it's kind of interesting because if you look at this, I think the Qs too. When the Qs bottomed, the bottom at 118.14, the support line was 118.75. Then we had the gap above it, and it was kind of off to the races. So this is a really nice swing. The diamonds did something similar. Okay, it held support at the 196.88 line, came within 4 cents of it, and then reversed up and almost took out the 200 line, which again is the equivalent of 20,000 on the Dow. Here's the GDX. Downside confirming line is 23.05. It closed 4 cents under that yesterday. Okay, so it closed under that 23.05 level, and I would expect the GDX to drop to 21.88. But what's kind of interesting about this chart is, if you look, the GDX basically ran 3 levels. Okay, when it bottomed here, it bottomed at the 1875 level, basically ran 1, 2, 3, and now it's correcting. So what's kind of funky right now about the GDX and really the GLD itself is the fact that they're both in a downtrend on the daily. Okay, yeah, we had a three level move short term, which I normally don't expect. So this next swing is going to tell us really if the GDX is going to continue down or if it does find support. Because quite frankly, I would not, if the GDX is to continue up, I would not expect it to break under 2031. If it drops all the way back to 1875, then that tells me the trend is down, and it'll probably go lower. Here's the XLE, okay? It's been really struggling at the 75 support line. And interestingly enough, when it broke 75, it came down to the 74.22 line. You can see twice it bounced off it. And kind of holding support at that downside line. Now, the 74.22 line is significant for the fact that if the XLE closed for 2 days under that, then I would fully expect it to drop to the next support line, which is that 71.88. And then here, let's just talk about a few of the earnings. Because again, we're getting into the earnings season. We haven't had huge moves, but there have been a couple of big ones. This chart is pretty interesting to me because this is Goldman Sachs, okay? They did report yesterday. They came out, they didn't drop huge, about $1.50 off their earnings, but nonetheless got underneath the lower band, okay? Now, here's something that's very interesting about this chart that I'm going to point out, okay? If you look at this 30-minute chart is in a downtrend, okay? And twice it bounced off the upper band, okay? Bounced back there on the 6 at 246, came down to hold support at the 200 EMA, rallied back to the upper band, and that's where this last immediate move started from. So typically, if the time frame is in a downtrend, all right, and it's at or above the upper band, it's usually a pretty good short. And, what's interesting about this is that Goldman was in that formation prior to announcing earnings. So, you naturally would have been probably, I would say, bearish going into these earnings. But now we're underneath the lower band. Now we go to the 60-minute chart, and what's kind of interesting about this is that the 60 was still in an uptrend, all right, which tells us that most likely this stock's going to rally. Here's another one that reported yesterday. This was ASML, and it's kind of an interesting chart. I wanted to show this daily chart because you can see how it rallied right above the mid-band here, had a little double bottom here, was rallying really strongly, and even the trend going into earnings was bullish. All right, so again, here's that 10-day trend. That was about a $5 move, and then it exploded up $7 off earnings. Then we go to a 60-minute chart, okay? 60 was in an uptrend and oversold. 30 was in an uptrend and oversold. And, the stock just continued to tick up and ticked up into earnings. And, again, when you look at these intraday formations and couple it with the daily, I mean, quite frankly, you would have been biased to the long side going into earnings, okay, even though it was kind of butting up against the upper band. But the point here is that, again, I don't typically advocate buying call options before the earnings. But, an interesting way to trade this is to take advantage of the high implied volatility and maybe sell out of the money put spreads. Okay, that's what I wanted to cover today. I told you it's going to be a fairly short presentation. But but if there's any questions on any of the charts, shoot them through. And then we'll move on and look at some live charts. Yeah, as I said, it's been kind of really dull. I mean, this has been a really dull market the past few days. I mean, and I think if we look, all right, so Yeah, you know what? It was a really quick presentation today on the PowerPoint because, again, to me, it's been really a slow market. I wanted to go back to the S&P chart real quick because this has been kind of an interesting scenario as of late. I mean, if you look at it, we're kind of bouncing between those two confirming lines. 2273 on the upside, 2257 on the downside. And the question is, are we going to hold support or are we going to fail? That's the million-dollar question. But here's the scenario, the big picture scenario. A, we're up against extreme bands, which does make me very nervous. We've got the VIX at all-time lows. I'm wondering what the event is that's going to pop out of the woodwork here to, jolt this market. And let me put this up here. This is what I wanted to show. Okay, here's the average true range up here. It's like 13 points. And you can see the ATR has been going down. So, we're basically have gone into this sideways consolidation. Excuse me. And if you look, the last couple of days have actually, the average, the daily range is actually less than 13 points. Okay, and even today, if you look today so far, we've had a 9-point range compared to an ATR of 13. So we've had this tremendous contraction in the market. And look at it. Okay, this is basically the last 3 days of price activity. Just tremendous contraction. So, I mean, these are the kind of days where you look at it and go, oh, geez, it's not even worth trying to force trades. Unless, you're focused on some earnings deals. Now, here's Goldman, okay? This is the live shot, down another 246 today. And I go to a 10. Okay. Now, look at the 10 here. The 10 has started to firm up. It's staying above the lower band. On the 30, it's still underneath the lower band. So I would have fully expected at some point we're going to get a pop here in Goldman. That's a good point. Andrew says tomorrow's Trump's inauguration. Wonder if that will affect prices during market hours. I wonder too, because, as you can see, we've had 3 days here of contractions. And I'm wondering if everybody's waiting for Trump to fall on his head or something. I don't know what people are waiting for here. And as I said, that dull markets like this, what is concerning is it's almost like these dull markets are enticing you to nibble on a short, all right? But again, I don't advocate doing that because, this is the kind of thing where if the market turns, this thing could rip up to that 2350 line really quickly. I mean, this could be one of these like 2-3 day moves. But, maybe Trump's inauguration is the thing that people are waiting for. I don't know. But I think it's a very valid point. The other one we looked at was ASML. Okay, now, this thing had spiked up well above the upper bands. And look, it's come back down to within the bands, and now it's starting to creep up a little more. So look at this. That low is 121.94. So this is kind of interesting because it did actually get underneath the low of that gap bar, and now it's starting to push up a little bit. So my feeling is it might retest the upper band and then pull back. Let me see, there were a couple of companies reporting today, or Netflix reported. All right, they're up. That's not a huge move, only up over 5%, but still it's a $7 move. Oh boy, look at that swing here. From pivot low to pivot high, that was about a $12 move. You know, I looked at the options, by the way, yesterday on Netflix, and if I'm not mistaken, the at-the-money call was like $6. They were really overinflated. And, you know, you would have walked away making a few dollars on the deal, but, man, yeah, it was. Netflix is taking off. Yeah, wow, look at that. When that broke out, it was just under 100. Boy, that's a 40% move in like 3 months. Unbelievable. But again, you know, it's interesting. As I said, I looked at these options. I think the 133 call was like $6. Now, that would have gone to about 10. You know, still you would have walked away making money, but I started pricing out of the money puts, and you know, there was a little money to be made selling the out of the money put spread. And you know, again, you all know how to project out what the projected move is going to be. But quite frankly, if you look at this stock, this really, you know, as I said, I looked at the 133 call was about 6, which tells me the 133 put would have been probably around the same price. So they were projecting a move of about $12. It only moved $7. So, you know, the guys that did their straddles on this got hammered, all right? You know, you would have recouped back about 10 with a risk of about 14, so you would have lost $4 an option. Let's see here if anything else. This PTC. Okay. This is up even a bigger move percentage-wise than Netflix. It's up 6.5%, up $3. And then CHKP was another one that reported today. All right. They're up about 7%. SBNY was another one that reported. All right, this really didn't do anything. This has been a really high-flying stock, by the way, this Signature Bank. Yeah, look at that breakout. Pivot low was 113, hit a high of 157. Tremendous move, but then, as we know, a lot of the banks made strong runs once Trump was elected. Even Bank of America went from 15 up to 23. Unbelievable. This Checkpoint had a heck of a move. Now, again, you know, the question is, could you trade this reaction? And right now, I'd say no. I'd wait. Excuse me. You can see it's way above the upper band on the 30. and way above the upper band on the 10. Now, I would nibble on a short once it closed back inside the upper band. And there's a couple, by the way, reporting tonight, IBM reports. So let's see what they're looking like. Okay, downtrend on the 30. Uptrend on the 60. Haven't looked at IBM in a long time. Uptrend on the daily. So at this point, I'd be biased to the long side. Let's see if Goldman started to move. Right, not quite yet. Not quite yet, but this could be a setup for tomorrow if it does in fact hold support down here. And it might bounce back up. But Goldman, by the way, was, like all these banks. I mean, look at this picture here on the daily. This busted through the upper band and just screamed. Moved about $40 at that point. Unbelievable. I mean, just took off and stayed well above the upper band for about 2 months. And, you can see it finally closed back inside it here recently. Yeah, this is just an incredibly strong move. And, you look at this, at the point, the pivot low was 157. So this basically, this almost moved $100 off that pivot low, which is what, about a 60% gain? That's an unbelievable move on a high-price stock. Unbelievable. And I don't know, JPM, let's see. Okay, well, they did something similar. They busted up through the upper band and took off. And again, if you look at this point of breakout, this was right at the election after Trump got elected, with all the speculation that all the speculation that he was going to repeal Dodd-Frank and, deregulate a lot of the banking institutions. Just an incredible move. Let me see, even Wells Fargo took out the upper band. Wow. And BAC, yes, okay, so they did break the upper band as well. Oh my gosh. What moves? These are like the moves on the metals. Look at that move on steel. 16 to 39. So that's what, $23. That's over 100% move in, what, 2 months. Now, the million-dollar question is, can we predict moves of these kind of magnitudes? That's the million-dollar question. And, what I was going to say is this. A lot of times, if you watch this ADX line, if this has been under 20 for a long period of time, the stock usually has a fairly big move once it breaks out. But steel was a little bit different. It wasn't quite under the 20 level. But if you look at Steel Dynamics, look down here. this was well, for a long period of time, this was under 20. And then it broke out here at about 26 and ran to 40 in a very short period of time. Yeah, I don't know if it's more of a forecast thing, but one of the things I'm leaning towards for earnings would be I want to see that ADX line under 20, similar to what we see here on Steel Dynamics. Now, let's look at a couple. I'm doing a great job at typing. Jeez. Let's look at some coming up. Let's go to next week. Let's see here. There's the Alcoa. Yeah, we don't really have any data there. That's right. They did their split, and let me see here. By Vertex reports. Now, all we want to see here is I want to see the ADX line well under 20 going into earnings. So that doesn't qualify. Let's see here. Let's take this day. Let's see if there's anything interesting here. We've got Boeing. Boeing is pretty high priced. No, it's not under 20. But if you look, by the way, here's Boeing. We look down here. Look at how low this ADX line was. 9, 12, and then look at the move it made once it started to move. A la validating my point, by the way. ITW. Right now it's 22. Nah, not quite. What I want to see is the pattern that we saw, like similar to Steel Dynamics. Let's see, Citrix. Okay, now Citrix is interesting because look, Citrix was down under 10. Here it peaked around 17, 18, well under the 20 level for a while. So this is one to follow and watch to see if Citrix actually does pop off of earnings. And again, it's my belief that that ADX line can be really instrumental in helping to determine whether a stock should have a big move or not. And I can show you example after example where that's happened. So the question is, how do we track that? And that's what I'm trying to do now, because quite frankly, we obviously want to be in stocks that have a potential for a large move, as opposed to just a small little breakout, and a fake breakout, by the way. All right, interesting. So here's one that we found just, toying around with this in a few minutes. Now, I'm not going to suggest you go out here and buy a gazillion options on Citrix the day before they report. What I am suggesting is, keep an eye on it and see if, that theory does hold true. But what I'm seeing is that if that ADX line has been relatively low, there's a good possibility that the earnings move should be fairly decent. What time we got? Okay. Let's see, anybody want to look at anything else while we're on? If not, then I'll start to think about closing down. Let's see here. Let's see what FireEye did. Oh, Tesla. Tesla had an upgrade, and they just took off. Look at that, up over 2% today. And look at that uptrend here on the 60. Just really strong. I'm sorry, that's the 30. On the 60, it's right here. And look at that. Since that buy point here on this pullback, it was 225, and it's up like $23 since then. But I'm going to show Tesla on a daily, which, excuse me, you're going to find pretty intriguing. If I go down here, right about here is when, September 28th, is when that ADX line dropped under 20. Basically spent 2 months under 20. And as I said before, usually when the stock starts to move, it has a pretty big move. And I'd say that this breakout move from 180 to roughly 250 qualifies as a decent-sized move. The question is, when is it going to move? And what's the trigger to get going? I mean, obviously, after the fact, we can see that the ADX, the plus D1, crossed up here. But, there was a cross up here. There was a cross up here. All right? So there were 2 scenarios where that happened. And then the third time was the charm. And then Tesla just blew up. So again, here's another example that validates my point. And, just look at that. Just continued to scream higher. But that's the setup. That's the pattern. That ADX line. And if we look at it, it was probably about 2 months that ADX line remained under the 20 level. And then you can see here that, obviously, after it bottomed, now it starts to creep up. Here's where it crossed 20, roughly in there at 202. Continued, obviously, to scream higher. Now it's at 240, roughly 245. That's the chart that everybody should imprint in their mind because, to me, that's the money chart. And again, is it predictable? I don't know. I mean, you've got to track these to try to find them. But again, what I do find interesting about this chart is that the expectation was that after it started to move, it should have a big move. And son of a gun, it did. Now, again, options, call options. I don't know what call options, at that December bottom would have been. Even if you were $10 out of the money. They were probably fairly expensive, but you know, if you paid, I don't know, $10 out of the money for 190, you know, now they're worth like 50. So this is definitely a strong setup. Now, the other thing here is this. I mean, obviously the Williams is overbought, okay? But if we look at this, the PPO is still positive and heading up. The plus D1 is still above the minus D1. So, I mean, to me, there's a strong likelihood that this move should probably continue. Having said that, you know, where will we go to? Well, the upper band here is about 253. So there's a strong chance that, you know, somewhere up there is maybe where you want to think about pulling off profits if you were long. Yeah, that's true. Well, Andrew said, this is a good point. Andrew says call options around the mid-band. The mid-band was like 210. And if you think about it, that's $30 out of the money, you know, when the stock bottomed at 180. Now I'm completely curious to see what they would have been. And again, this whole Yahoo Finance is really annoying to me because I don't get really good past historical data on options. The S&P, by the way, is fighting that 2266 level. So let's take a look here. The January 20th, which would be the monthly anyway, if we go back and look at the 210, let's see here. You see it. This is what's really irritating. They're not really good at showing this historical data anymore. So I can't even tell you what it would have been. But you see, the interesting strategy, by the way, to me on this particular setup is to conceivably use the half and half strategy, where maybe you buy half at the money, half at the mid-band. When it hits the mid-band, you sell the at-the-money calls. Come on. Let's go back here. You look at the 180s. The 180s are like $64. You see that they're not giving me historical data here. It would have been interesting to know what they would be, what you could have paid for those. Now, if I go to right now, Tesla is trading at 243. So if I go to next month, this will give us a general idea. Yeah, I think, let's go out to February 17th. Okay, February 17th. The 245s are like 950. All right, so now, when Tesla was 180, that's what, $60 ago, roughly. So let's make a wild guess and say you could have paid $6, all right, for the 180. Let's say you paid $8 for the 180. You know, what did we say? They went to $63. So if we look at $30 out of the money for next month, that would be the 270. They're about say 2.25. So that would mean So again, we're just speculating here. That would tell me that the 210 call would have been roughly, let's say they were $2. They're now like $34, $35. So on a 5 lot, which costs roughly $1,000, that's now worth about $15,000. And again, that's the setup. I'm giving you the setup that basically helps to predict a big move. And again, what I want to see is that ADX line well under 20 for an extended period of time. And by the way, the longer the better. You know, but from what I've seen, it seems like it usually lasts about 60 days, not 60 days, about 2 months, which is really 40 trading days. In the case of Tesla, it lasted 1, 2, 3, 4 months, roughly. So the longer the better. It's almost like a spring. The longer that the ADX line has been under 20, the bigger the move's going to be when it breaks out. So, I mean, there's a perfect example of using the half and half strategy where maybe you bought half at the money, half at the mid-band, and you watched it just continue to rip up. You probably, by the way, you would have got nervous in here. Because you saw it break above the band, pull back a little bit. But guess what? The mid-band acted as support right there. And then it was off to the races from there. Excuse me. So these are the trades that I want to be finding this year. That's a really nice trade. All right, any other questions? That's a really nice trade. Yeah. But to me, you got to buy a little time here too. You can't use weeklies for this. You want to maybe go out 2, maybe even 4 months of time. But as long as this line keeps heading up, to me, the stock's going to probably continue up. It's getting to a point of exhaustion. Right now, it's at 48.22. Right now, if you're long, you are on alert that this stock, that profit taking should be coming into the stock. But anyway, that to me is the pattern that is probably one of the best patterns you'll see out there. And I think it's the best pattern in terms of high predictability, in terms of, foreseeing or foretelling of a big move. So anyway, I think yeah, you definitely. Yeah, you buy an option for $6 and it goes to 60. You got to start thinking about booking, or use a stop. As I said, we've had the gap up here. I think it might go to 254, the upper band on the 60. But, at that point, you'd be gone. If this thing went to 254, that's another $10. Those options are now up to 70. And, that's a nice trade. That's a really nice trade. But the pattern is what I wanted to show, because that, to me, is a fairly, how do I say it? It's a fairly strong indication that a big move is going to follow. The question is, when do you get in? That's the million-dollar question, because as I said, if you look at Tesla on the daily here, it was oversold here, oversold here, and again at the bottom here before it made the breakout move. So, you don't know when it's going to make the breakout, and you just, that you can't predict, because say you bought in here, you know, this is still a nice move, by the way. It's still a $20 move, but, you know, obviously this bottom here was the one that preceded the rapid or the large price expansion move. See, if Tesla wasn't so high priced, the other sexy thing here to me would be buying the stock and just selling calls and just continuing to do that until it finally did have the breakout. But, you know, obviously with a $180 stock, you know, 100 shares even is 18 grand. So it gets a little pricey. And percentage-wise, you're not making that much by selling an at-the-money call or slightly out-of-the-money call. All right, well, anyway, listen, I don't see any other questions. I hope this has been helpful. You know, my suggestion is pull off a copy of this chart and, you know, make it available. As a matter of fact, you know what I'm going to do is go like this. No, that's not what I want, webinars. And I'll send it through so everybody has it. Because to me, this is like the money pattern. All right. Well, listen, thanks for being here today. And, you know, God willing, we'll see you again in 2 weeks. Thank you very much, and have a great day. Bye now.